Good morning, everybody. Mike Vacchi, Princetontrader.com, here with your Friday morning pre-market webcast. Okay, the last few days we've talked about if the bears could seal off the 9-day simple moving average, the blue line, that it would open up a test of the daily midband, and that moving from all-time highs, as stretched as they were, back to the daily midband is a very normal occurrence. There's nothing bearish about it. It's the way markets like to trade. Well, here we are. And now it is, now it's decision time. Now the pressure's on the bulls. Now the bulls have got to defend the green line there, the daily midband, in order to keep this as a buy dips market. We have not been back to the midband since December the 29th, the last trading day of 2017. It tested it there pretty cleanly right at the close. Caught a lot of shorts way over the tips of their skis, assuming that this was the early starting gun to the big move down in January that could not have been more incredibly wrong. And we went up for the vast majority of the month. We hit our bet the house level up at 28.74, and we have now come off, not even 100 handles. We've come off 80 handles, okay? So when you think about that in terms of percentages, it's not even a 3% move down. Still very orderly. There's really not been much panic in this, even in the down moves. And now we're doing a very solid test of the daily midband. So what's today going to be about? Today's about, can the bears convert the daily midband? It's pretty simple. Can they convert it or not? They've tested it a couple times. They're actually testing it right now from underneath. We've traded as low as 27.97 in the overnight. Couple of very weak pops and a couple of nice moves down last night. I did not catch the down moves. I traded as a matter of circumstance or luck or bad luck or whatever. I was only around to trade the pops. So we had two nice little green trades, 8 handles, 6 handles on the pops. But then I missed the bigger moves down. But I refuse to have any FOMO, any fear of missing out in a week where we've done about 107, 109 handles, depending on what you got. So today for us is going to continue to be about keeping what we did in the first 3 days of the week. We had a very, very solid day yesterday. The morning was a little bit bumpy. I think it traded pretty sloppy yesterday morning. I mean, at least relative to how it had traded Monday through Wednesday. The afternoon offered a couple of really solid shorts. The bears continue to do their job. Their job is to make lower highs and lower lows. They continue to do that. And as long as they continue to do that, it's going to put tremendous pressure on the dip buyers who have, not been getting paid as regularly as they are accustomed. You can see the hourly midband. I think the hourly midband's really got a hold on any kind of a pop today. We do have the jobs report at 8:30. Don't game jobs. Don't assume the market is going to do one thing or another ahead of the jobs report, just like you don't want to assume the market is going to do one thing or another ahead of the Fed on Wednesday. We have tried to convert the pre-Fed number a couple times since the announcement, and the bears have, they've allowed a little bit of a move over the top, 36, 37, etc. But essentially they have held the Fed, the pre-Fed price. What we've seen in the last 6, 8, 9, 12 months is you've seen that pre-Fed price go very solid support and get lifted off of, and really, you just kind of wave to it in the distance as you fly away. We have not seen that. If we still haven't seen it in a week, you have to wonder whether we're going to be in a more sell rally situation for the month of February, meaning you're going to get your two-sided market, and it's going to be a two-sided market where the bulls have a couple of weeks, the bears have a couple of weeks, and if you're a trader, that's an ideal situation. So we're having a lot of fun with it in the room. If you want to come check us out, you want to try it, this is the time to come take a trial. We got a ton of new people in. It's a great environment to learn. You can learn with a lot of new people about what we are all about. I had a bunch of people that, a bunch of old friends come back, sign up yesterday. They understand that, the market is changing. So, the tape is coming around. Traders have had a tough tape, I would say, for the last at least 18 months. Straight up directional tapes are hard on traders. More two-sided tapes, you can get what you need to get during the course of a day, and you don't have to be perfect with your entries and things like this. Very little things that this tape is allowing you to do. I don't know, it's not going to go on forever. Look, at some point in the next 60 days, we're going to end up in a compression tape. Bands expand, bands compress, but in this type of environment, I don't expect it to last very long. So today is about the daily midband. Keep your daily chart up on your screen all day long and pay attention to the relationship between price and the daily midband. All right, everybody have a good one. Have a good weekend. I'll be out with a wrap up later on. Trade them well. I'll talk to you then. Follow us over on Twitter, Instagram, and Snapchat at Princetontrader. Check us out on Facebook and join us for a free trial at www.princetontrader.com. Trade them well.